Welcome to the Silent Trading channel on Sunday the 5th of April. Today we'll be going through the gold chart to check and see if there are a spot that will be suitable for a position, right, for an entry. But before I start, please subscribe, like, comment and share if you like this video and to support me in my trading journal, right? Today I'm going to be starting first on the weekly chart, right, the weekly time frame. Because why? Because the week's candle has been closed already, right? So tomorrow's new candle open will be a new week candle, which we will then be going through right now, and to see the best possible spot to enter a trade, right? So as we can see, we'll be starting on a weekly chart first, right? In the weekly candle, we can see that there are already a bullish price action formed, right? Where is the bullish price action? This is a bullish price action, but is it a complete and a strong one yet on the weekly chart? Nope. On the weekly time frame, it is not a complete, right, and a strong bullish price action yet, but it still counts as a bullish price action, right? But in the 4 hours chart, in the daily chart, it is already a strong bullish price action, but not yet on the weekly one, right? But we can see that as it is already a bullish price action, if tomorrow's candle, right, if tomorrow's candle push up to create a top wick first, right? Now I'll create a first wick. If tomorrow's candle push up to create a top wick, right, to create a top wick first, we will be looking to enter a sell side position, right? If the weekly candle start pulling back, and in a smaller time frame, in the lower time frame, it start forming a bearish price action or a bearish reversal, we will then look to enter a short position or a sell position. Because why? If the chart directly pushes up without creating this bottom wick first, we know that the chart is creating a top wick to take out sell side volume, and after taking out sell side volume, where it then start to pull back and then start pushing down, right? So if tomorrow's candle start pushing up to create a top wick first, we're going to be looking to enter a sell side position, and our stop loss would be at this previous candle wick. Because why? If it pushes up to attack this previous candle wick, it is triggering sell limits, right? It is accumulating sell side volume, because this previous week's high wick over here is also a kind of resistance, and resistance is used to accumulate sell side volume, right? So if tomorrow's candle push up to create a top wick first, we're gonna be looking for a spot to enter a sell position, a short position, but only after we have looked through 4 hours chart, 1 hour's chart, and it has started forming a bearish price action, right? If a bearish price action isn't formed yet, we are not going to be entering a trade, because entering a trade without a bearish price action formed is entering a trade against the trend, right? But if a bearish price action has formed and also has complete that bearish price action, right, and it becomes a valid bearish price action, you will then not be going against the trend, but you are going along with the trend on that specific time frame. Okay, so right now we can conclude something, right? We can conclude that our buy limits and sell limit will be over here, right? This will be our buy limits, or our buy side order that we will be waiting, right? This will be the spot that we are looking to buy, and this will be the spot that we are looking to sell, right? And why is that so? Why is that so? It is because if the chart push up to form a top wick first, it is pushing up to take out sell side volume before pulling back and then start pushing down, and then start pushing down to attack support. But if it first form a bottom wick, right, push down and form a bottom wick while not attacking the next support and then start pulling back, we will then be waiting to buy at this low wick over here in alignment with lowest time frame, creating a bullish price action. Do you get what I mean? Which means if this weak candles over here start pulling back, while on the lower time frame it has produced a bullish price action, and if better, it needs to complete the bullish price action. And if that bullish price action is complete and it becomes a valid bullish price action, the next thing we're going to do is we wait for the candle to retrace, and then we start buying. And then if we start buying and this weekly candle over here start pulling back all the way up, we can then conclude that our buy side order, our buy side position is a safe one, right? And especially if it push up all the way and then start attacking more and more resistance, it is then telling us that it is going to continuously accumulate sell side volume, which means if it is continuously accumulating sell side volume, our buy position is safe. Okay, so when we enter a trade based on our understanding that the market has taken out buy side volume. We are going to be buying, and after taking out buy side volume and we buy, and if the market start pushing up to accumulate sell side volume, if it start accumulating sell side volume, it is accumulating to start expanding, right? It is accumulating to start expanding either by a slow expansion, or we call it a sideways up, or a heavy expansion upwards, right? It can be both. It can be a slow expansion, right? A slow ascending, or a heavy expansion upwards. It all depends on the price action. It all depends on human psychology. It all depends on what are the current human behavior at that moment, right? It will then start pushing up based on human behavior. If most of the people are going against the trend and start selling non-stop, the price will start expanding non-stop either, right? The price will start expanding non-stop. But if people are not too eager to enter a sell side volume, sell side position, right? People are not too eager to go against the trend. The chart will go on a slow sideways up. At least go on slow sideways up until it has accumulated enough sell side volume, and then we'll start expanding, right? So we either wait for the chart tomorrow to push up to form a top wick, or push down to form a bottom wick before we start buying, before we start selling, right? And this is only on the weekly time frame. If you'll be looking on the daily time frame and the 4-hour time frame, there'll be a lot more details to watch. There'll be a lot more details to observe, right? And wait for the best possible spot, the best possible details that are telling you that the chart is ready to go up, the chart is ready to dump, right? And as we can see, the daily time frame, the latest daily candle has already cleared itself, right? This fair value gap that you call, the daily candle has already cleared itself. So this is a mitigated fair value gap, right? As you know it. So after clearing itself, it can right now push down, right, and dump, or it can push up and expand, right? It can right now expand upwards or below after clearing off all unmatched volume, right? A fair value gap is volume and position that are unmatched, right? Due to a sudden high volume accumulation. When the price start expanding from a sudden high volume accumulation at a certain spot in the chart, the price will spike, right? So this is a gap, this is a clearing gap, right? To clear and match all of the volume, all of the position by order book. And after clearing everything, after clearing this zone over here, it is right now ready to push up and also ready to push down. Because why? Why is it so? Because it has already formed a bearish price action on the daily chart, right? But the bullish price action is still strong. At least it is strong until this bearish price action complete, right? Until this bearish price action becomes a valid one, this bullish price action is still strong one. It's still a strong one, right? But the problem is it has already formed a bearish price action, but not yet a strong one at that. But it doesn't mean that it won't be able to complete this bearish price action. Because why? Because if this bearish price action is to be complete, the next candle tomorrow will be to push up, creating a top wick, right? While not attacking resistance, and then start pulling back and then start pushing down. And if it start pushing down to attack support and break below and break support, right? Breaking support means closing below support. And if it really managed to close below support, it is telling us that this bearish price action is complete, right? So if this bearish price action is going to be complete, it is going to push up, forming a top wick, and then start pushing down, right? Pulling back and then start pushing down. And if it managed to break support, this bearish price action becomes a valid one, which means the bullish price action is already broken, right? It doesn't need to break this specific key support. It only needs to form a valid bearish price action and complete it. And after completing that bearish price action, the bullish price action becomes invalid, right? So when a bearish price action is formed, we wait for the chart to retrace while not attacking resistance before we start selling. And if it becomes a strong one, it needs to then pull back and then start pushing down further. But if not, or it suddenly start forming a bullish price action over here, it is also possible. So every time we trade, we weigh the both possible choice, right? There will never be one choices to make in the chart, because there will be multiple details to tell you that the bearish price action is still strong, the bullish price action is still strong. So even though it can form a bearish price action, it can also form a bearish price action and then dump, and after dumping and then create a new bullish price action. So before we enter every single position, wait for the best confirmation that you can find, that you can wait for on the chart. So be patient, right? So everything can go against you at a spur of a moment in the chart, because the market isn't designed for you to profit. The market isn't designed for retail traders to profit. It is designed for the big money, for the institution, for the banks to profit, right? So the best thing you could do is must analyze in detail and never leave any single clue behind, because every single clue is telling us something. It is telling us the movement. It is showing us what the chart is really going to do. And then after showing us everything, will we then start expanding either upwards or below, right? So we wait for the best possible spot to enter a trade from tomorrow, and I will be here for you guys. I'll be analyzing for you guys tomorrow. So look forward to it and stay tuned to my new videos tomorrow. So for today, I'm only gonna be analyzing for the weekly time frame and the daily time frame. And tomorrow I'll emphasize more on the 4 hours time frame, on the 4 hours chart, for you guys to be able to see more detail, right? And be able to enter at a more accurate spot, right? So for today, that is all I'm gonna be analyzing and talking with you guys. And I look forward to see you guys tomorrow. So for today, see ya.